Hey everyone, Anthony Brown here, Associate Broker with Royal LePage Atlantic. Thanks so much for tuning in. I put out informational content about the local real estate market here, trends in the industry, things like that. And I just love chatting about this stuff. And I appreciate that you took the time out of your day to watch this video. If you guys could do me a favor, if you like the video, if you learned something from it, if you think it's good content, can you go down below, throw a like, maybe subscribe to my channel, and stay in the loop with future content that I put out? And I'll put a link down in the comments below. So if you want to book a call with me to chat about questions that you have about the real estate market, your needs and wants in real estate, anything like that, there will be a link in the comments below where you can book a call with me at a time that works for you. On today's video, I want to talk a little bit about the changes that came recently to capital gains and how they're taxed here in Canada in the 2024 budget. And to do that, I wanted to bring on one of the smartest guys I know, a great mentor of mine and a good buddy, great golfer, family man, amazing musician, my good pal Phil Soper. Phil is the president and CEO of Royal LePage Corporate. And again, like I said, one of the smartest guys I know. So when I was thinking about who I wanted to bring on to chat about some of the changes that came to capital gains and how they're taxed here in Canada this year, he was the first person I thought of, and he graciously accepted my invitation to come on. So without further ado, Phil Soper, enjoy. All right, so guys, I'm really happy to welcome Phil Soper to my channel today. Phil is the president and the CEO of Royal LePage Corporate. He's a great guy, super smart, great golfer, family man, incredible musician, and quite honestly, one of the smartest guys I know. So I thought when I was putting this video together of the capital gains changes that had come out this year, he was kind of the first person I thought of, and I really appreciate that he came on. So welcome, Phil.
Hey, thanks. Great to be on, and thank you for the kind words right back at you.
You don't have to say that just because I said it, pal. So in the 2024 federal budget that came out earlier this year, there was some pretty hefty changes to how capital gains are taxed in Canada. And I guess I kind of want to ask you, from your perspective, what are the highlights for kind of the average real estate consumer? What do they need to be aware of the changes that came through this year?
Yeah. Well, essentially, the what's called the inclusion rate, the amount of the gain you make on a capital investment, say a stock or a piece of real property, a residential or a commercial real estate investment. When you make a gain on that and you sell it, they previously included 50% of that value in your taxable income. Now it's 75. So, or sorry, 66, 2/3. So, but I mentioned the 75. If we go back to 1999, it actually was 75. So this is something that our policymakers, our political leaders, have played around with in the past. When they make the number lower, they're trying to encourage more capital investment.
Mhm.
And when they make the money higher, they're looking for revenue to support other spending priorities. So right now, our government has decided that they need the cash. So they've come after investors of all sorts like I said earlier, all sorts of capital projects.
And you kind of touched on this, but in your opinion, what was the government trying to accomplish specifically as it pertains to real estate capital gains?
I don't think they were really focused on real estate specifically. Uh, Obviously, it's a big part of the capital a lot of Canadians own, but our principal residences are the value that we receive in the homes we live in are tax free in Canada. Most countries are not, but they are in Canada. So this is just aimed at that slice of real estate investors that are looking at it as a place to put their money and try to grow their money. So it's capital projects right across the board, a broad-based tax increase to fund other spending programs.
Yeah, and you kind of spoke on this, but it's really broader than just real estate. So kind of
Absolutely.
halfway through the year, we're halfway through 2024 now. Do you think the government has accomplished what they were hoping to with the increase in capital gains?
The change to the capital gains tax was done mid-year. So we haven't had enough time at the time you and I are talking to understand whether or not this is going to result in material additional revenue, or if it has put a damper on people's desire to invest in real estate or other assets.
Yeah, it's still kind of fresh.
It's brand new.
Yeah.
Yeah, and in fact, it takes some time before you realize the full impact of these kinds of fiscal policy changes. We won't really even know at the end of this year. And remember, this is one of the easiest ways for politicians to differentiate themselves.
Mhm.
It may well be when we're in a federal election campaign that one of the opposition parties uh, decides that their policy or their platform is going to be more pro-investment, and they may take this in a different direction. So you never know how long this kind of policy lasts. Although I will say the last change to the capital gains tax was made almost a quarter of a century ago. So I wouldn't expect. My guess is once the government's got their hands on the cash, even a change of government, they don't like to let go of the money.
Yeah,
They'd rather spend it. Yeah,
it probably won't change too quick.
yeah.
So you kind of touched a little bit about this again, talking about people putting money into real estate as an investing platform. I know a lot of people that I know, a lot of my clients, a lot of my network have built considerable wealth investing in real estate, including their primary residence. I don't think my family wouldn't be in our forever home now if we hadn't bought and sold many properties that we lived in throughout the years. Do you think this change to capital gains and how capital gains specifically in real estate is taxed? Do you think that's going to deter people a bit from investing in real estate? Do you think it's going to affect kind of the average real estate consumer that could build wealth through buying and selling multiple properties?
If you look at the actual materiality of the change, it shouldn't deter the vast majority of investors from pursuing real property, real estate as an investment class. People are going to invest, and the capital gains tax covers everything. So, whether you can go into the stock market or you go to real property into real estate, and I can tell you which one has been a more reliable
Yeah.
and consistent source of returns over my lifetime, and it's real estate. So we're going to continue to see people investing in this space. Uh, Talk to your accountant, talk to your realtor, talk to Anthony to understand the materiality of this for the investments you're considering. They're not they're not earth shattering. It's not like, oh my God, the spigot's going to turn off. It comes at a challenging time, given that for a few reasons, it doesn't make great sense to me. Number one, Canada wide and in Atlantic Canada, we have a shortage of housing.
Yeah, agreed.
Number two, the high interest rate environment that we've seen post pandemic has slowed building. So we are not addressing the housing shortage, the housing supply crisis we have in Canada, and high interest rates aren't helping, and certainly increasing taxes for investors is going to put a damper on an already slow moving investment marketplace right now. So the timing is poor. That said, it's not earth shattering, and you can certainly still uh, find a way to make oversized returns with the right kind of advisor in the real estate space.
It's kind of just the cost of doing business. People are going to kind of categorize as the cost of doing business.
That's well said.
Yeah, and that's kind of what I thought. Like, a lot of people were pretty shocked when it came, and there was a lot of news headlines, which there always are. But I think it's one of those things where it kind of made a bigger splash in the headlines than it will in practicality.
I'd say you're bang on. If you look at the hurdle rates before you start paying the tax, they're material, particularly if you're not in Toronto or Vancouver, and you're looking at, you can make a 33% return and not hit the hurdle rate in Halifax. That's not going to happen in Toronto. So when you're dealing with much more expensive housing, the numbers that you hit those hurdles earlier. So I think particularly in Atlantic Canada, there'll be a lot of people that can make a nice return on their investment and stay under the point where by they're feeling like they're being overtaxed on their real estate investments.
And I think you're correct. I mean, a lot of the things that you said were kind of the things that I had thought initially, and it's a bigger splash than it is in actuality. And listen, pal, I really appreciate you taking the time to do this. Any final thoughts, kind of specifically about the changes to how capital gains are taxed and how it could affect the average consumer or the investor or anything like that?
The entrepreneurial investor, the investor that purchases a property or properties for use by families as a home. In other words, the investor who becomes a landlord is the bedrock of the shelter we provide for 1/3 of the Canadians in this country. So it's a very, very important and a noble asset class.
Yeah.
It will continue to receive support from all levels of government, the investor in this space, and rightfully so. So while there are hiccups and challenges along the way, this is both the right thing to do for the country, for your neighborhood, for your neighbors, but also given our boisterous economy, given migration patterns within Canada as people flow from high expense regions of the country like Southern Ontario to more modestly cost regions like Atlantic Canada, I think it will continue to attract investors who are particularly those who are the buy and hold style investors who are looking for long-term capital gains.
Yeah, and that's always where I've see the biggest opportunity in real estate is the long term, because it's one of like the investment is appreciating while loans that you have on the investment are depreciating. So the money you owe on it is going down while the natural appreciation of it's going up. I love real estate as an investing platform. I mean, that's how I got started. I bought my first property when I was 20 and fell in
Good
love
for
with
you.
it then. Yeah, no, and listen, I really appreciate you taking time to do this, Phil. And hopefully it's not too long before I can get you on again.
You take care.
Thanks so much, pal.